Options courses charge $2,000. A $40 book covers more. Here's the free curriculum.
If you're learning options trading in 2026, here's what nobody tells you up front. The free curriculum from the OCC, Fidelity, Interactive Brokers, and one $40 textbook covers more than most $2,000 paid courses. That's not a typo. I'll show you exactly which resources to use, in what order, and why options is the one corner of trading education where paying more usually buys you less. And there's one module almost no paid course teaches, even the expensive ones. Hold that thought. To see why courses get this wrong, you have to see why options are unlike everything else. Every other instrument has one dimension that matters: price. Options have 5. Price, which is delta, time, which is theta, volatility, which is vega, plus gamma, the curvature of delta, and rho, the rate sensitivity. The first real lesson any serious options trader has is this: a stock can fall 5% and your call still gains value because implied volatility expanded. A stock can fall 10% and your put loses value because IV collapsed harder than the move helped. You can be completely right on direction and still lose money because volatility moved against you, or theta ate your premium before the move arrived. That's the trap, and that's why a weekend YouTube binge will never get you there. A real options education has 11 modules in this order. 1. Underlying asset literacy. Actually trade shares first. Understand bid-ask spreads, after-hours risk. 2. Options vocabulary. Strike, expiration, premium, intrinsic versus extrinsic, in the money, exercise versus assignment. 3. The 4 single-leg trades. Long call, long put, short call, short put, with payoff diagrams you can draw from memory. 4. The Greeks. Intuitively first, then mathematically. 5. Implied volatility and IV rank. 6. Vertical spreads. Bull call, bear put, bull put, bear call. Defined risk directional trades. 7. Income strategies. Covered calls, cash secured puts, the wheel. 8. Volatility strategies. Iron condors, iron butterflies, straddles, strangles, calendars. 9. Adjustments and defending tested strikes. Rolling out and up, closing for a loss. 10. Portfolio level risk management. Vega and theta budgets across positions. 11. Tax mechanics. Wash sales for options, the section 1256 60/40 rule for index options, assignment basis adjustments. Most paid courses cover 1 through 7. The good ones reach 9. Module 10 and 11, almost nothing covers them properly. Hold on to that. The free stack covers exactly those gaps. Start with the Options Industry Council, OIC, run by the Options Clearing Corporation itself, the central counterparty for every listed U.S. options trade. They have zero commercial reason to make you trade more or less, which makes their content the most neutral on the internet. Exchange staff use it to onboard new analysts. tastylive's beginner course is concrete and high production, but biased towards short premium strategies. That's Tom Sosnoff's house style. Just know it going in. Fidelity's options classroom is excellent on tax and assignment mechanics, the parts most courses skip. Interactive Brokers Traders Academy is the most analytically demanding of any free program out there. Black-Scholes, binomial trees, portfolio-level Greeks aggregation. Schwab's thinkorswim platform tutorials are the gold standard for live workflow. The risk profiler, the analyze tab, paper trading. Then Macmillan's options as a strategic investment. $40, paperback, 1,000 pages. The standard reference textbook every legitimate options trader owns. Read it over 3 months while paper trading, and you'll know more than 95% of retail options traders. Total cost, $40. So when does paying actually make sense? 3 cases, and only 3. Option Alpha if you want a backtesting platform and trade automation. The tools justify the cost, not the videos themselves. Columbia Business School's Options Strategy Program, if you're a finance professional who needs the credential. $2,000 to $3,000. Defensible for a CFA candidate, indefensible for a self-directed retail trader. Coursera's Yale Derivatives modules inside Robert Shiller's Financial Markets course. About $50 a month, audit-free without certificate. Useful for theory but light on execution. NYIF's derivatives certificates if you're exam prepping for an actual derivatives role. $500 to $1,500. Notice the pattern. You're paying for tools, accountability, or a credential, never the content itself. That part is already free. Because the moment a course sells you content, the scam math kicks in. Red flags. 100% returns per month. That only works by selling naked puts, which is catastrophic in a market drop, or far out of the money credit spreads, which is positive carry until the 1 month it isn't. Fire your boss income strategies? Covered calls and iron condors generate modest, lumpy income. They do not replace a salary on a $10,000 account. The pitch always assumes a 7-figure account they never disclose. Proprietary indicators that signal winning trades, almost always repackaged RSI, moving averages, and IV percentile, all free on TradingView. Lifetime mentorship with no defined deliverable? Marketing line, not a service. Real-time trade alerts bundled with a course? That's a signal service with curriculum bolted on, and copied signals get bad fills as everyone tries to enter the same trade. And watch for courses that recommend specific brokers. Many take affiliate fees for the referral. Cross-check broker quality independently before opening an account. Walk away from every one of those. And speaking of who you give your money to, the broker shapes the lessons you actually learn. tastytrade is purpose-built for options, low per-contract commissions, and the whole education ecosystem. tastylive, dough.com is woven into the platform. But the UX nudges you toward short premium. Schwab, which now owns thinkorswim, has the best analytical platform out there, hands down. Risk profiler, analyze tab, paper trading. Fidelity is strong on assignment and tax mechanics. No commission on equity options under most account sizes. Interactive Brokers is the cheapest for active traders with institutional-grade risk tools, but the learning curve is steep. Webull is zero commission and fast, but thin on education. Robinhood will approve you for options in 5 minutes, and that's exactly the problem. The simplified UI hides assignment risk, expiration mechanics, and what an exercise notice actually means. Not recommended for serious learning, regardless of how easy it is. Pick a real broker, then run the operating plan. 6 weeks, 2 hours a day. Week 1, OIC modules 1 through 6. Open a paper account on thinkorswim or Webull. Read the first 100 pages of Macmillan. Week 2, the Greeks deep dive. Paper trade 5 long calls and 5 long puts on liquid names. SPY, AAPL, MSFT. Journal every trade. Week 3, vertical spreads. 10 bull puts, 10 bear calls. Size so max loss is exactly 1% of paper account equity. Track your win rate and average return. Week 4, Iron Condors and the Wheel. Read Macmillan's chapters on spreads. Watch Tasty Live's daily show and note their IV rank entry thresholds. Week 5, paper trade 10 short put positions through assignment scenarios and compute the cost basis effect. Week 6, earnings volatility. Read Augen's volatility edge, trade 5 earnings straddles on paper, reflect on what real money implementation would actually require for risk management. Then, and only then, fund a small live account with 1 to 5% of intended capital. The friction of real money, slippage, assignment surprises, tax reporting, teaches you what paper trading cannot. Earlier I told you one module almost no paid course covers. Here it is, Tax Mechanics. Module 11, Wash Sales for Options, the Section 1256 60/40 rule for index options. Basis adjustments after assignment. Get those wrong and a profitable trading year becomes a tax bill surprise in April that wipes out months of gains. That's why the free stack from the OCC, Fidelity, and Interactive Brokers, institutions that actually deal with this mechanically every single day, beats most paid courses on the parts that matter most. So here's your operating system. OIC plus Tasty Live plus Fidelity plus Macmillan, $40 total. 6 weeks of paper trading, 2 hours a day. When you go live, start with cash secured puts on stocks you genuinely want to own and covered calls on stocks you already hold. Both have defined max loss tied to the underlying. Both teach assignment mechanics in the cleanest way possible. Neither has unlimited downside. That's how you learn options trading properly. $40 and 3 months of discipline beats a $2,000 course every single time.
$40 and discipline beats a $2,000 course every time. Full breakdown and link in the description.